So a little story about algorithmic trading, right? So not even algorithmic by itself. A lot of people trade a certain style and it works certain times it doesn't work. Well, why? Because markets go through cycles. They go from a trend to consolidation, trend, consolidation, trend, consolidation. And now in ETH or Bitcoin, right? We haven't done pretty much anything from end of June when we were consolidating from early May to mid June, and then we trend a little bit, and then we for the last 4 months, 5 months, we haven't done anything, and the volatility is definitely decreasing because even in this range between 20 whatever 19,000 and 25,000, there was some action going on, but now the all of September and October, we're pretty much just sitting between 20,000 and 18 and change. So this $2,000 range is all we are getting. So what does it tell you as a trader? Well, first of all, you should know that again, every impulsive move is preceded by a move like this. So we gonna and now that we've reached this weekly trend line and actually surpassed it. Um, well, if you look at the weekly, so we gonna get some kind of move. It's either gonna be up or down. The trend is down. So chances are, if some shit is gonna come out next week, which is gonna be risk off, and we get once this week we got the CPI data. The markets rallied hard. They first sold off on the CPI data, and then they rallied hard. But we've pretty much um, closed more than half of this rally done um, during CPI data. So the markets are still, everybody's still selling. So Bitcoin and ETH and all the other coins, no exception. So how do you make money trading this? Well, first of all, so we're gonna go on the 4 1 hour uh, uh, time frames. We're gonna take a look. So we've been probing 18,000, low 18,000, quite a few times. If we're gonna get to above 20,000, as you can see, every time we're getting above 20,000, we're getting sold. Maybe a little rally, but we always get sold off. So first of all, don't use a lot of leverage because your stop loss has to be above 25, 26 if you really want to short. Second of all, you can trade short term um, range like this to 20 and a half thousand if you want to. So if you see it, the price pops off and then starts reversing, you sell, go short, and with that reversal because it's probably going to retest these lows. Buying here, you can buy here, but you see what they do. This was the low, right? Then they ran it up, ran it up. People who are like, "Oh my God, we're finally going up." They put their stops below this low, and what happens? They trigger the lows, they grab the liquidity, reverse, and then they go. Same thing here. The people who were short, they're like, oh my god, this is a pullback, let me go short, we're gonna have new lows. Their stops is here. So it's a very highly manipulated market by the market makers because they're just gunning and running stops. So you're better off setting stops wider, in this environment because all the technical analysis nonsense, it basically is just gonna stop you out and reverse it you all the time. Same thing here. This was the previous high. We ran the stops, and ran the price up, ran the stops, stopped everybody out who were short here, and then went down. So again, if you're gonna trade something, trade with wider stop, not just a few points above, so to speak, right? Short distance. Now, should I be buying the lows? I don't know. I'd rather be selling the highs for now, until I see some reversal in risk assets like the U.S. stock indices, this and that. I think that we're still going to be going down in crypto. So, just a little quick lesson on how to trade ranges versus trending moves and what to expect. Again, looky here. This was the previous low, right? They ran the stops again. The A lot of people got liquidated because they were long. They're like, "Oh, I'm buying the dip, I'm buying the dip, I'm buying the dip." So they pushed the price down, ran the stops that were concentrated below this point. And how do they know where the prices are concentrated? Well, because first of all, people who are market makers, they're at exchanges, so they see all the books, they see all the order flow. And second of all, they also know what kind of books you read on a technical analysis. So you're going to place your stop here for the new highs, and it never gets to the new high, just consolidates for, uh, I don't know, a month, 2 weeks, and then they run your stops and then they reverse. So if you're going to trade something, lower your leverage, wider stops, way outside the nonsense, right? So if you're gonna set a stop, this low right here, or at least like below this previous low, so somewhere at least halfway through, so 1100, something they're not just gonna be dipping and then reversing. But again, where is the trend? The trend is still down. So we've been consolidating for quite a while, from again from June till now, and now the range is getting smaller, smaller, and smaller. So it's like a spring that coils. You push, 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 push. At a certain point, it's gonna get a release, all the pent up energy, and you're gonna have a blowout move either to the top or to the bottom. So you have to be ready. Hope this little lesson helps. As always, more than welcome to stop by apexbull.com. Our free Telegram is in the description. We share all the trades, the crypto, forex, whatever. Stop by, say hi.